You might be asking yourself, should I sell my home or rent it out? It's a big question, and the answer really depends on your situation. Getting it right can make a big difference in your financial future. So let's walk through how to make the right call for 2026. This isn't a one size fits all conversation. The market, your lifestyle, your goals, they all matter. By the end of this, you'll have a clearer idea of what makes sense for you. Let's start with the money side. If you sell your home, you can get a lump sum of cash up front. That can open doors. Maybe it's your down payment for your next place. Maybe it wipes out some debt, or maybe it gives you breathing room in your savings. Selling also locks in whatever profit you've built up. If values have climbed the past few years, cashing out puts that gain in your pocket instead of on paper. On the flip side, renting gives you monthly income instead of one big payout. It's a slower burn, but steady cash flow can be powerful. You'll still be building equity over time. If prices rise in the future, you could sell at a later date for a better number. But here's the catch. That only works if the math pencils out. Rent has to cover your mortgage, taxes, insurance, and upkeep. Otherwise, you're subsidizing your tenant, and that's not a winning plan. Now let's talk about taxes for a minute, because they matter more than most people realize. Florida and federal rules can both change how this decision pencils out. If you rent out your home, you'll lose your Florida Homestead Exemption. That exemption keeps your property taxes lower and caps your assessed value increases at 3% a year. Once the home becomes a rental, that cap jumps to 10% annually. If you've owned your home for a long time, that can mean a serious jump in taxes. Here's an example. Let's say you bought your Central Florida home back in 1999 for $150,000. In the real world, with all the ups and downs over the years, your assessed value might be around $220,000 today, even though the market value is closer to $450,000. You're paying property taxes based on less than half of what your home is worth. If you rent it out in 2026 and lose your homestead, that 3% cap disappears. Your assessed value could rise up to 10% each year until it catches the full market value. That means your property tax bill could double or even triple over the next several years. And here's where it hits your bottom line. Once those taxes start climbing, your rental income has to keep pace. Using that same Central Florida example, where taxes rise from about $1,800 to over $5,000, you're looking at an extra $3,200 a year, or roughly $265 a month in added costs. Then layer in rising insurance, lawn care, repairs, and the occasional vacancy, and your rental needs to bring in several $100s more per month just to break even. If rents in your area flatten or you can't command top dollar, those extra costs can wipe out your profits fast. That's why landlords need to run a real-world budget, not just compare their mortgage payment to the rent check. If you sell instead, there's another tax rule to keep in mind: the capital gains exclusion. When you've lived in your home for at least 2 of the last 5 years, you can usually sell and avoid paying taxes on your gain, up to $250,000 if you're single, or $500,000 if you're married. But if you've already moved out and rented the home for too long, you can lose that exclusion. Timing matters. For example, if you bought your house years ago for $300,000 and it's worth $550,000 today, you could sell now and likely pay 0 capital gains tax. Wait too long and that same sale could be taxable. And just to be clear, I am not a CPA and I'm definitely not your CPA. Everyone's situation is different. The tax laws change. So before you make a move, talk to your own tax professional. Don't rely on social media advice, and definitely don't take it from Uncle Larry at Thanksgiving. Before you decide, open the Sunshine State Handbook to the worksheet on selling versus renting. It walks you through step by step how to compare your potential sale proceeds to the rental cash flow, factoring in your mortgage, insurance, taxes, maintenance, and even management fees. Seeing those numbers side by side on paper makes the decision a lot clearer. Now, let's break down a little bit further. You need the funds for your next move or a major expense. You want to lock in the gains you've made while the market is still stable. You're ready to stop dealing with repairs, taxes, and insurance on that property. Once you sell, you're free of that house completely. It's off your plate. Here's some reasons to rent. You're moving temporarily and plan to return. You like the idea of steady monthly income, or maybe you think Central Florida prices still have room to climb, and you want to hold on for the next wave. If rent covers the bills with a cushion left over, it could be a smart play. Now let's talk about who this really applies to. Some homeowners are deciding whether to sell the house they live in. Others became accidental investors a few years ago and maybe kept their first home and rented it out when they upgraded. Now they're wondering if it's time to finally cash out. I actually had a Sanford homeowner in that exact situation. They figured renting would be the safer move, so they leased the property for a few years. The problem? Taxes and insurance went up, and the profit they expected turned into a loss. By the time they decided to sell, they'd missed their capital gains window and owed tax on the sale. It was a good reminder that timing matters, and what looks safe in theory can shift fast in the real world. The decision looks different depending on your goals. A homeowner might need the equity for the next house. An accidental investor might be tired of managing tenants or seeing shrinking margins as taxes and insurance keep climbing. Let's talk geography for a second. Florida is not one big market. It's 100 little ones. Seminole County isn't the same as Volusia, and Orlando doesn't move the same as Sanford or Oviedo. Even neighborhoods can move in opposite directions. Some areas are still holding strong while others are flattening. That's why it's important to get localized data before you make your call. Now, life plans matter as much as numbers. Are you moving away for a year or two and planning on coming back? Renting might make sense. You'll have a home waiting, and someone else helps pay the mortgage while you're gone. But if you're moving for good, or you've already found your next dream house, selling might give you freedom. Less juggling, fewer bills, one home to focus on. Don't underestimate the emotional side of being a landlord. It is not passive income. It's another job. You'll handle tenants, repairs, and the occasional 10 p.m. AC stopped working call. Some people don't mind that, others absolutely do. If you're still not sure, think about hiring a property manager. They'll take about 10% of the rent, but they handle the headaches. If that sounds worth it, renting could stay on the table for you. Let's zoom out to 2026. The Florida market has been steady, but not every pocket moves the same way. Central Florida, especially Seminole County, still has strong demand thanks to jobs and relocation. But inventory has been creeping up, and sales have cooled a bit in some areas. If prices hold steady or rise slightly, renting gives you a chance to ride the market longer. If rates tick higher or supply grows, selling now could mean capturing the best value before any slowdown. Nobody has a crystal ball, but we can read the signs. And again, if you're trying to make that decision, the Sunshine State Handbook has a detailed guide in the middle that walks you through your break-even, rent math, your repair outlook, your long-term gain scenario. It's quick and practical. Let's touch on condition for a minute. Be honest about where your house stands. If it's due for a new roof or AC, would you rather handle that as a landlord or let a buyer handle it after closing? Sometimes selling saves you from the upcoming costs. But if your place is in great shape, you have the flexibility to choose either path and win. Here's a simple truth. Both selling and renting can work if they fit your goals. Selling gives you cash now, clean break, no more upkeep. Renting gives you income and long-term upside. But you carry more responsibility and risk. So ask yourself, what does the next 5 to 10 years look like for you? Do you want to manage a property, or do you want to simplify and move forward? And remember, this isn't about what's right in general. It's about what's right for you. Your finances, your timeline, your stress level. So before you decide, remember this. Selling means instant cash, no more property worries, and total freedom. Renting means steady income, continued ownership, and potential long-term growth. Neither choice is wrong. The right choice is the one that fits your life. And selling now doesn't mean you can't be a landlord later. You can always buy again when the numbers make sense. Now, if you haven't already grabbed a free copy of the Sunshine State Handbook, scan the QR code on your screen or just call me at 407-754-6412 and I'll send it straight to you. It's full of local tips and smart decision tools for Florida homeowners. Take your time, run the numbers, and be honest about what kind of future you want. Whatever you choose, selling or renting, make it intentional. I am still Tom McNamara, and this is the Florida Real Estate Insider. Thanks for hanging out with me, and best of luck making your 2026 game plan.